Hey, what's up, traders? Jack here from Solar Trades, and today I will be going over some beginner tips and trips for trading. Before we begin this video, I just want to let you guys know that I am a Bigot affiliate. My sign up link will be in the caption below, as well as my copy trading link. And lastly, if you want to trade with me on Discord, make sure to join Solar Trades. The link will also be in the description below. Website, Discord, all that. But to start with the video, there's a few things I want to go over. Firstly, is I want to go over how you can find your own trading strategy, because what a lot of people do is they'll join a Discord or follow some guy on YouTube or Twitter, and they will try to copy him, and it won't work out. Even if the person they're following is a successful trader, right? They're actually legit, because a lot of those people are not actually legit. Um, but even if the person is totally transparent, right? They're a good trader, whatever, and you're still losing money, it's because trading is a lot more than just following someone. It's about kind of doing it and learning it yourself. I remember when I first started trading a few years ago, it's like 4 or 5 years ago. I um I did learn. I started out within a trading group. I mean, it is, in my opinion, a very good way to learn, because you're able to watch hundreds and thousands of hours of videos and do research on your own. But being in a trading group, in my opinion, is honestly pretty good, because you're able to with people who are trading at the same time as you, and um, you're able to figure out your own kind of stuff, and you'll be able to talk to people, cross-reference ideas, find trades that maybe you weren't expecting to find or looking at. You might maybe find an indicator or part of a strategy that you really enjoy that you're able to put into your own strategy. But the point of the story is, though, you're not able to solely follow someone and be successful. And because trading is a very hands-on type of thing, and I think it is very important that you are able to not only find, but also utilize your own trading strategy. And it doesn't have to be anything crazy. I've already made a video on mine. It's super easy and simple. The way I trade is trade on higher time frame, right? The 4 hour. I look for trends in the market, whether it be bear or bull pennants. Right now, we're in a bear pennant. I'm actively shorting. Um, but you can trade a bull pennant. I trade a lot of wedges, right? Here's a good example of one, right? A little sending wedge. I shorted this. What was it, like a month or two ago, right? So my strategy is very, very simple. And a lot of people maybe have even simpler strategies, or I've seen people with really complex strategies and complicated. But the point of the story is everyone trades very differently. And like me and my friend, right? We're both very good traders, I'd say. But a lot of the times we're almost counter trading each other, because he will see something on the lower time frame and he would want to short it, while on the higher time frame I see something that I want to long, and it both works out. He will make money on his short, and then a little later, a few hours later, day or two later, I will then go make money on my long. So we trade incredibly differently. However, the outcome is still the same, which is profits. And I think everyone needs to find their own trading strategy, because you should never ever just follow a trader blindly, no matter again who it is. You should never follow someone blindly. You should do your own research, your own due diligence, and how are you going to do that without your own strategy, right? And strategy, like I said, could be something as simple as, let's just go to a new layout, right? A strategy could be something as simple as an RSI and a moving average, right? Let's just let's see. put the RSI, and then we could have a moving average. Just for an example, we could, and this just goes to show that you're able to do this fairly quickly. So we could do the 50-day moving average with the default RSI settings, okay? So let's say, I don't know, where's a good place we could do this at? I used to trade with the moving averages and the RSI, so it might be a little rusty, but I used to trade them a lot. But you know what? Let's go. I like the 200 day a lot, so we could use the 200 day. So here's what we could do. Here's what we could do. Okay, right here. Look right here. Here's a good example. Again, this is just off the top of my head, but here's what we could do. Here's a 200-day moving average, right? I did a live stream about this, but the moving average shows two things. It shows market trend, sentiment, right? And it also shows support resistance. So right here, we could use it as support and resistance. So we got this, and then we could also see, so just by default, you're going to want to be looking to long, right? Price is over the 200-day moving average, right? So it's bearish, right? Or sorry, it's bullish right now, and it's coming up on it, and just by that, you're going to want to long off this. So price is coming to it, you want to long, but everyone, and I'll go over this a little bit more, everyone needs to have not only patience, but you should never rush into a trade, meaning you have to do more research, have more confirmations than just one or two things. So you'll first want to look to long here, and then you'll see that the RSI is not only under the moving average, but it's also getting to the oversold levels. Anything under 30, again, this is on default settings, anything under 30 is oversold, anything over 70 overbought. So RSI is currently well oversold, under the moving average. So this would be a really good indication to long right here, right? And look what happened. Price goes up and you would have made a nice trade. What you could have done something like you were to long right off this, you could have it right at these highs, you could have it slightly low, right? Now, boom, just like that, you have almost a really good 5-to-1. You got your take profits up at this line. You got your stops a little bit below. I tend to find a swing low of the last few candles and set my stop slightly below it. So look at this trade, right? We long off the moving average because of our RSI confirmation, and we have our take profits right up at the swing high, right, which would be this. And then go a little below, we got our take profit, or our stop losses right below our swing low. And like I said, boom, there is a nice 5-to-1 risk to reward. And it could be as simple as that, you know? Obviously, that was a very specific example. However, I just found that example within 5 minutes of looking. So I highly recommend that you find your own trading strategy, and it will be hard to find something you like. And that's where, again, I say that watching or following other people could be really useful because, for example, me, the way I trade, it works, and hopefully, some of the ways I trade, some of the indicators and strategies I use, people could pull that from mine and create their own with it. So I could leave a link in the description below to the video I made a few months ago on how I trade. We can go back to that layout. Where is it? Here it is, swing trade. So I will leave a link below. Again, it's a very simple way. I look for a bear pennant, bull pennant, ascending wedge, descending wedge right now. Here's a bear pennant, right? Got the flagpole, and then here's the actual flag. And then what I'll do is I'll draw out Fibonacci lines for support, resistance, take profit, stop losses. So we got really, and I use VRVP with this too, which shows historic volume at certain price. So right here, we got a fib line and a ton of volume. I'd say this is not technically no, but this is pretty much point of control. So a lot of resistance right here. Pair that with bear pennant, And we got RSI super high right now. This is custom RSI, but super high right now. Money flow deep in the red. Um, there's just a lot of things, right? But anyway, that's not the point of this video. But everyone should have a trading strategy, and hopefully, and again, it doesn't. It could be something super simple, but it needs to be something that works for you, and that will require some back testing. It will. You could paper trade with it, right? Um, I do. When it comes to paper trading, I um I recommend it for certain situations and certain reasons. I don't recommend it for everything. And I'll get into that why. When it comes to finding a strategy and understanding price action, technical analysis, fundamentals, right? When it comes to actual just bare bone trading, I do recommend paper trading. I think it's a great way to get a feel for the market, to learn new things, right? If you want to test out a new strategy, I think paper trading is a great way to do it, right? Because it's doing all the same things, but just with fake money. So if it's not a good strategy, well, then you don't lose anything. However, I don't recommend paper trading sometimes when you're fully beginning. Like if you're a complete like beginner and you're using paper trading to figure out trading as a whole, I wouldn't necessarily say it's the best thing to do for the sole reason of you're not getting any psychology. You're not figuring out how to trade with your emotions, mentally, psychology, right? And I'll get into that. I'll get into that a little later in this video. But paper trading is great for specific goals you want to achieve. Like I said, for figuring out a new strategy, go with paper trading. If you want to get a feel for price action and how price reacts to certain trends and indicators and whatever, paper trading is amazing. However, if you want to get a feel for trading as a whole, I would recommend that you also do some real life trading with maybe smaller positions, or you might like eventually you'll just have to jump in the water. You can put your feet in the water, get a feel for things, but the best way to learn how to swim is by jumping in the water. You can't learn how to swim by just dabbling your feet in, right? And again, I'll go over that a little later. But yeah, so paper trading good for a few things, not good for a few others. um well, I guess we get into that right now. So once you've figured out how to just get a feel for price action, right? Like what happens when price goes on this line, right? At this price level, we see it break above, comes down again, and then breaks up, right? We call this a double bottom. And price, see, again, if it comes to strategy, it could be literally as simple as price comes down again, forms a double bottom, and then boom, you could catch a long right here, right? We could hit them, you could go long right here, and then you could have slightly below there. And again, this is just a quick example. You're never gonna get the top of this trend, but you could have maybe you have top of this, right? Here's a swing high. You have stops slightly below bottom wick of this, and then just like that, you almost have a 6-1, right? But how do you know that that's going to happen? It's you have to get a feeling for price action, right? But you found your entry, right? Let's say again, let's use this trade for an example. You found your entry based off technical analysis or your strategy or however else you found it, okay? The hard part now is what to do when you're actually in the trade. This is the hardest part. Is the emotions, is it's what are you going to do? You should trust your strategy, right? You know that when a double bottom happens, that price tends to go up after a double or a triple bottom. In this case, it's a double bottom. Price tends to go up. Now what? You're stuck in a trade, and well, you're not stuck, but you're in a trade now, and you see a red candle forming, right? You see some nice green action. Now you see a red candle forming. you're gonna start second guessing yourself. You don't know how far. Yeah, that red candle only went down a little bit, but you don't know how much in real price action, right? In a real trade, you're not gonna know that, oh, that price might go all the way back down. We could get rejected right here. I mean, there's a lot of support, or excuse me, there's a lot of resistance right here, okay? Price might get fully rejected and you're gonna wanna, oh, take profits, this or that, right? That's the hardest part with trading is once you're in a trade, how do you react to the market, what the market does? And this goes back to paper trading. It's when you're paper trading, the whole point of it is using fake money, but you're never going to learn how to deal with your emotions in paper trading because it's fake. You can be a robot in paper trading because again, it's all fake money. So, the best way to learn how to deal with your emotions is when you use real money, and that's why trading isn't easy. Trading takes thousands and thousands, tens of thousands of hours to perfect, right? I've been trading for over probably 15,000 hours, and there's not going to be one person out there who has mastered their emotions because it's so incredibly hard and it's how to deal with it. And that's where I get to my point of you have to trust your strategy, right? If your strategy is double bottom, you long off the double bottom, right? You have your take profits at swing high, you have your stop losses right below swing low. You need to trust it because just like this, it worked out, right? It very well couldn't have, but if that's your strategy, and again, this is all just a hypothetical example. I personally don't like trading double and triple bottoms, but that's just me. So again, just take this with a grain of salt on this specific example, but the point is still the same. Right now, go down to my trade. I need to trust my strategy, right? I shorted, I didn't get a perfect entry. I shorted about here, stops like this or something, right? This is about my trade. I expect it to go a little lower, but a bunch of my take profits are here. I need to trust my trade. It hasn't broken out yet. I've been in the negative a few times, right? But I need to trust my trade and my strategy that this is a textbook bear pennant and right super strong resistance right here. We got a reversal triangle. RSI is super high. I need to trust my strategy and not look at it that price will play out. And this also goes over you need to have patience in your trading. You can't trading is not a it's not a get rich quick thing. It's not like unless you are fully scalping, right? High leverage, quick trades, which I genuinely do not recommend, especially if you're watching this video. Scalping is very high risk, could be a high reward. But again, high risk, and I would recommend, especially if you're watching this video, it's no disrespect or anything, but you start off with higher time frame swing trading, right? Low risk, low leverage, keep things easy. And this is exactly how I trade. It's not that I can't necessarily go and scalp. I do sometimes. However, I have the most success with my swing trading, right? And again, that's just me. But point is, you need patience. You need patience to one enter a trade, right? You can't rush into a trade. That's the best way to lose money. Um, and you also need patience when you're in the trade. And this goes with you got to trust your strategy. I entered my trade a day and a half ago, right? And it hasn't done anything yet. And I'm not going to be taking profits or selling, right? Price has gone back up to my entry a few times. It is right now. I'm not going to be selling and scared, right? And I'm not going to be complaining that, oh my God, Bitcoin needs to fall. You got to have patience. You got to trust your strategy. I had patience entering it. I could have entered it all the way down here, right? Could have broken out there, but I didn't, and I would have gotten screwed if I did. And that's all down to patience. So what was I going to say? Another thing is once, and I'll go back over because there's a lot more mental side of trading than just trusting your strategy. But real quick, there's another tip is that kind of in regards to patience. You need to also, and this goes with everything, again, other than if you're full on scalping, is you need to have multiple confirmations, right? This also goes with finding your strategy. So what I do is, again, I made a video on this, but go over this quick. What I will do is, oh, and one more thing that goes along with this. It's first before anything, you want to find a few coins you like trading. For example, I like trading Bitcoin. I like trading Bitcoin and ETH, right? Those are the main two coins I trade, and I have by far the most success with Bitcoin and ETH. And that also kind of goes with your strategy. It's like, oh, my strategy works very well with Bitcoin. Okay, so I will stick with that. I don't recommend jumping around from coin to coin, right? Just trying to find an entry or a trade, and because there's too many what's the word? Too many factors. If you're jumping around from coin to coin, trading a ton of different stuff, so find one or two coins you like. I love Bitcoin, ETH. Most of the time, it's just Bitcoin, right? I trade Bitcoin. I got a set leverage I like to, well, not set, but I got a few leverages I like to use, either 5, 7x, 10x, or 20x, all depending on right what like how exactly I'm trading it. But because jumping around from leverage to leverage isn't good either. So you want to stick with a plan, right? Stick with your strategy, trust your strategy, stick with the one or two coins, one or three coins you like using, stick with the leverage you like using, you feel comfortable with, right? Stick with a set position size you like using, whether it be numerical or percent size, whether it be 5% of your report or I don't know, $1,000, right? You need to stick with it. Um, but anyway, back to back to being patient. With my strategy, what I like to do is I have a separate watch list. This is a watch list that has a lot of other assets from a ton of different asset classes, right? We got crypto, we got Bitcoin dominance, and we got ETFs like the Dow Jones, we got SPX, NASDAQ, we got the dollar index, right? We got some futures indices, we got stable coins, USTD dominance, we got some commodities like gold, oil, right? We got some Forex pairs, the euro, US dollar, and we got some big stocks, right? We got Apple, Amazon, Nvidia, Tesla, right? But what I do is I will look at all of these charts and I will draw it out. So let's say we got for Dow Jones, we got a nice ascending wedge right now. This is obviously bearish, right? This is a bullish pattern into a bearish reversal. We got hard rejected right here, similar to Bitcoin, and I expect the Dow Jones to fall. Or yeah, I expect the Dow Jones to fall, right? Let's go to DXY. Right, here's the dollar index. We see a bullish descending wedge, which is bullish. So the thing about the dollar index and USTD dominance is you want the inverse to happen, right? Here's a little, not the best, but here's a little bull flag, right? I expect that to go up. If you want to short Bitcoin or you want to short SPY, you're going to want the dollar index and tether dominance to be the opposite. So I want this to go up. I want DXY to go up if I want Bitcoin to go down. Um, but if you see what I'm doing is I'm looking at all these other charts right now, and I'm looking to see if they all line up with each other, right? So we got Dow Jones bearish. We got the dollar index bullish, broke out. Dow Jones about to break out, right? We got NASDAQ looking like it's going to break down soon. Okay. We got SPY. And if you look, it's all showing the same thing. Maybe not technically the same, but very similar, right? We got rejected here. and that's the same. So what I'm telling you is that you want all of your charts to line up with each other. If they all line up with each other in the same direction, odds are it's going to go in that same direction, right? We got all of our indices, right? ETFs, they're all bearish right now except for the dollar, right? We got this tether dominance, bullish, right? We got Bitcoin dominance, perfect, bearish. And then guess what we have for Bitcoin? Bearish, right? Um, where is my chart? So that's the whole point of being patient is that you got to be don't rush into a trade. You want to analyze everything, right? To make sure it all lines up because why on earth would I be longing Bitcoin right now? Let's just say just hypothetically, I'm not trading like this, right? And I'm thinking, okay, right? We see a bit of a bullish divergence forming. VWAP is coming up, right? If I was trading solely off this, off microcipher B, I'd be like, okay, that's bearish. So it's just hypothetically. But I would go over all the other assets and I'd say, why would I long here? Everything else is bearish, right? Really bearish. And so that's to say that this was probably going to be bearish too. Price is probably going to fall because everything else is falling or is about to fall as well. So this is what really changed my trading for me is when I started to cross-reference other asset classes into my trade. And it takes a little while, right? It could take an extra 10 minutes to go through all of this, but that extra 10 minutes of confirmation is so worth it and and enables you to trust your strategy that much more because when price is kind of just chilling right here, coming back up, coming back down, you could start second guessing your trade. But when everything else looks the same as your chart, it's the odds are so much higher that your trade is going to work out. And that's how you're able to trust your strategy so much more. So few other things, right? We went over patience, we went over trading strategy. So here's a few more things. These kind of go hand in hand. You can never look over your past performance, well, in a bad way. Technically in a good way too, but in a bad way. And you can never revenge trade. What I mean by going over your past performance is, let's say, uh, okay, hypothetically, let's say you were gonna long, let's say you were gonna short right here, okay? You want to short here, right? You see a little sell signal, and you can see the start. I guess let's just say you wanted to short, right? It looks like it's breaking down out of this lower trend, and you get down and you're like, oh, cool, I'm in profits, and then boom, you get stopped out, right? Don't don't replay that in your head for too long. You should, after you get stopped out, you should look over. Okay, why didn't this work out? Why did my trade fail? It could have failed for a million different reasons, but why did it? You want to analyze why. First, you want to analyze why did I even short right here, right? What compelled me to take a short right here? Once you figure that out, you're like, okay, right? It was part of my strategy or whatever. And you're going to want to figure out why didn't it work? And this is how you fine tune your strategy is understanding that maybe if you're a breakout trader, right? You could have shorted right here, right? Broke out of this, could have shorted right here, but it maybe wasn't the best breakout. It was a false breakout. And you want to figure out why that happened. But then after that, you can't look at it and be mad at yourself for doing it because if you went with your strategy, if your strategy told you to short there, you can't be mad that you followed your strategy. If you impulsed it, yeah, you could maybe be a little upset with yourself, right? Now you learn not to impulse trade anymore, right? That's why you got to be patient, trust your strategy, look over multiple different things. So if you didn't follow all of that, yeah, you could be a little upset with yourself. Just tell yourself, hey, I got to trust my strategy again. But you can't let that weigh over your next decisions, right? once you analyze your trade, once you analyze your entry and why you took a loss, you can't let that affect your next trading decisions, right? You can't now impulse right here or right here, right? This area, you can't impulse along because then you're doing the same thing. You impulse along, or here's an example, right? You get stopped out here, you impulse along, right? You're getting a little greedy, you don't take profits, and it falls back here, and now you're either, depending on where you longed, you're either at break even or you're at a loss and you decide to impulse sell, right? Then that gets you in a vicious loop of revenge trading and impulse trading, and you're throwing everything, every part of your strategy out the window. So that's why you need to, if you take a loss, figure out why you even took the trade initially, right? Was it part of your strategy? Or was it not part of your strategy? Then, okay, you screwed up. Don't do that again. Simple as that. Follow your strategy, be patient. If it was part of your strategy and you took a loss, well, now there's a learning lesson. What could you do to refine your strategy even more, right? Why did my strategy not work? Okay, well, it didn't work because XYZ, and now you could add that to your next trade. Okay, well, if my strategy, if two out of three things line up, but that third doesn't, it might be too risky to take, right? The same thing could happen. So that's where you do want to look over your trades. However, like I said, now once you figure that out, you cannot think of that trade again because it will just affect your decision making. Same goes for a profitable trade, right? Let's say right here, just an example, right? This was a good trade on my end. I, I booked a huge win. I sold somewhere over here. I'm not going to get euphoric again and re-enter a trade when price starts going down because when you take profits, here's a saying, no one has ever gone broke taking profits. You want to lock in your profits, and then if price starts going down again, you can't think there and say, "Oh man, if only I held," right? Because what if you did hold? Price could have very easily gone back up. This drop right here is no longer part of your strategy. And if you were to impulse short it, it may have worked out, but it very well couldn't have. Because what if you decided to short right here? Well, you would have gotten screwed. So that's why when you take your profits or take a stop, you need to analyze why did I take that trade and why did I exit? Whether it be you hit a stop loss, whether it be you took profits, whether it be whatever. You want to figure out why you did that, and then you can't look back. You want to just wait for another entry because once you start impulse trading or revenge trading, you're just throwing everything out the window and you're pretty much gambling. That's when people say, oh, trading's gambling. Yeah, when you're revenge trading, impulse trading, it's gambling. But when you're following a specific strategy that you are comfortable with in trading, it is not gambling. Yeah, there's always a bit of unknown, but your chances are much, 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 much higher than if you were to just impulse trade or revenge trade. And that is one of the hardest parts of trading as well is not only when you're in a trade, right? You need to trust your strategy, right? You can't get freaked out over small things or you can't get euphoric, right? When things are going well. You just need to trust it. And let's say you do trust it and it just doesn't work out. We'll figure out why it didn't work out. Or if it did work out, you won't, there you go. Your strategy works. But if it doesn't work, figure out why it didn't work and you need to adjust your you need to slightly adjust your strategy to so you can know that okay when this happens it might not work next time in the future and that's a lot of that again is it's a lot harder it's a lot easier said than done and that's where using real money kind of helps with the process because you can actually feel those emotions and you know what they feel like and you know to not do them versus if you're just paper trading it's like oh well I lost $20,000 on my paper trading account, no big deal. But if you lose $1,000 in real trading, you're like, oh damn, that kind of hurts. Now let me really figure out what happened and what went wrong. Um, Last thing I'm gonna go over, I kind of went over everything I wanted to go over except for risk tolerance and greed. And what I mean by that, especially risk tolerance is pretty self-explanatory. Like for this trade example, you should never use a big portion of your a portfolio. I honestly tell people trade, let's say my risk tolerance was $1,000, right? Just for example, I would feel comfortable losing $1,000 on this trade, right? If I lost 100% of my trade, I would feel comfortable doing that. I will never be in a position where I lose 100% of my trade. However, you should use you should base your position sizes off if I'm entering $1,000 position, I would feel comfortable losing that full $1,000. That's how you should figure out how much of your trade you're going to do. That is my thought on position sizing. It's really whatever you feel comfortable losing. If your whole trade went to zero, you should feel comfortable or you should be able to lose that. If you can't, right? If, oh man, my whole trade went to zero, damn, that would hurt. Then don't use $1,000. Use $500. And if you're like, oh, if I lose 500 on this trade, that's fine. Then there you go. That's your position size, and you should never, ever, ever be in that position. Right? My stops are at just under 3%. Right? I'm going to lose way less than that. But hypothetically, I would feel comfortable losing that $1,000. And there you go. That's your position sizing for you. And when it comes to greed, I just went over about how if you lose money, you should not impulse or revenge trade. Same goes with when your trade goes well. If let's say right here, your strategy was when you see a blue triangle and you see divergence right on both the momentum and RSI, then you short. And you had your entry like this. Again, this is all just hypothetical. This was your you're gonna have stops like right above this. Okay. This was your trade. You shorted, okay. You hit take profit one, you hit take profit two, you hit take profit three. Well, two things. One, you should always have multiple take profit levels, and you should always trim. Right here, you trim 25%. Here, you trim 25%. Here, you could trim the rest of your position, or however you want to do it. Maybe you trim 25% here, and then you set stops to break even, and then you trim another 50% here, and then you trim the rest of your position here. Whatever you want to do, that's up to you. That's part of your strategy that you have to figure out. But when price is dumping, you might feel a little euphoric, right? You might start getting greedy. Oh, I might not want to take my profits here. I'm gonna wait, all right? And you keep waiting, 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 and while this is maybe a bad example because it would have worked out, right? But when you're getting euphoric, you need to still follow your strategy, right? If your strategy tells you take 25% at your first take profit, take it, right? Move your stops to break even. If your strategy tells you 50% at take profit two, take it. Then you want to move your stops here. And at take profit three, right, trim the rest of it. Then boom, you're out of the position. And this is where it comes down to. Once price keeps dumping, you don't want to get into another trade because this is not part of your strategy, right? Price looks very oversold right here, but price is still dumping. You don't want to hop back into it because let's say you were to do it right here, right? Like, oh man, I could have done this, could have, would have, should have. So let me hop in. Price is going to keep dumping. Boom, you get stopped out, and then you just lost a big chunk of your profits from this really good trade. So you can't get greedy either. It works both ways. When you're in a successful trade, you still need to follow your risk management. You still need to follow your strategy. And when that time comes where you're fully out of your position, if price keeps going in the way you wanted it to go, don't hop back into another trade until you get another confirmation. So for example, right, my trade, so okay, I just now noticed this. right? We see we got a little bit of an ascending wedge. I technically could have taken this trade, right? This is based off my strategy. It would have worked out. Price goes down, right? I didn't take this. I wish I did, but I didn't. I hit my take profits, right? Price keeps dumping. Oh well. However, now look, we got another entry. We got another confirmation that price is going to keep going down. This is where you could enter a short again. It's not over here off an impulse, right? Euphoric impulse. Oh, price is going to keep going down. No, you wait, you be patient, you trust your strategy, and now look, another opportunity presents itself. And this was a very good way to catch two trades on the same direction, but being patiently, right? You don't get greedy. This is again hypothetical. I wasn't greedy. I took my take profits here, and then yeah, I was like, damn, maybe I could have had more room for profits. Whatever. I did an impulse. I waited until this entry presented itself, and now I'm in a short again, and I expect price to keep going down because this is a bearish continuation pattern, right? Bearish, and then a little bit of consolidation, and then it's going to continue being bearish. So hopefully this video was useful. I know I just said a lot, so feel free to rewatch this. If you have any questions, I have my Discord in the description below. Please feel free to join that. Ask me questions. I'm Jack, right? I'm the owner. So please ask me questions if any of this was confusing to you, because again, I just said a lot. Um, but I really hope you guys found these tips and tricks helpful because these were the things here. What I went over was some of the things that took me the longest to figure out, right, in my own trading. So hopefully I was able to give you guys a little bit of insight on how to just maybe the do's and don'ts and stuff and how I do it. So like I said, I really hope this was useful. If you have any questions, please feel free to join my Discord, link below. Um, Lastly, again, I'm on Bitget. You could find my sign up link. You can find my copy trading, all linked below in the description. But for now, I hope you guys enjoyed it. I plan on making more videos soon. I know I said that last video, and then 3 months, 4 months went by. But yeah, I do plan on posting more videos. But there you go. Like I said, I hope you guys enjoyed, and I'll see you guys in the next video. See you guys.